Okay, we think it's a good time to start. Good morning, ladies and gentlemen. On behalf of Thai General Insurance Association or TGIA, Thai Insurance Brokers Association or TIBA, Australian and New Zealand Institute of Insurance and Finance or ANSIF, and Thailand Insurance Institute or TII. It is my great pleasure to welcome you all to today's webinar on electric vehicle insurance, building a sustainable and collaborative ecosystem in Thailand. This webinar aims to explore the evolving landscape of EV insurance in Thailand, share global best practices, and strengthen collaboration among insurers, brokers, associations to ensure a sustainable and resilient future for the industry. We are delighted to have participants joining us today from Thailand and also across the region. Thank you for taking the time to be a part of this important discussion. To officially begin the program, may I now invite Ms. Katrina Chang, Chief Executive Officer of ANSIF, to deliver the opening remarks.
Thank you very much for that warm welcome, and it's a great pleasure to join you today at this very important webinar. On behalf of ANSIF, I'd like to extend my sincere thanks to our co-hosts, that's TII, TGIA and TIBA, for bringing together such a diverse group of stakeholders. This collaboration truly reflects the shared commitment across the region to strengthen the insurance industry's capacity to respond to new and emerging risks. As we all know, Thailand's automotive industry is transforming rapidly, with electric vehicles now accounting for over 20% of all new car sales. The market is advancing faster than ever, supported by strong government policy and growing consumer demand. While the opportunities are enormous, the shift also brings to us new challenges for our industry. From battery risk and repair costs to data availability, residual value uncertainty, and underwriting complexity. Insurance brokers, car manufacturers, regulators are all being asked to adapt faster, collaborate closer, and innovate smarter to ensure that EV adoption remains both sustainable and insurable. For ANSIF, today's discussion aligns perfectly with our mission to advance professionalism, knowledge and standards across the insurance and financial services industry in the Asia Pacific region. Through education, professional development, thought leadership and collaboration, we aim to equip professionals with the insights and skills needed to navigate emerging issues and risks. Electric vehicle insurance is one of these pressing and most exciting needs. We are proud to partner with Thailand's leading associations in creating a platform where knowledge from markets in China and Australia can be shared to help build a much more resilient and innovative ecosystem here in Thailand. I hope today's discussion sparks not only ideas, but also new partnerships and practical actions, because the future of EV insurance will depend on how well we work together across the value chain. Once again, thank you to our co-hosts, to our speakers, and to everyone joining us online today. We look forward to an engaging and insightful session. Thank you.
Thank you very much, Ms. Chang, for your inspiring message and continued support in strengthening our professional development and collaboration in our region. To start our first session, we will hear from the insurer's perspective on current EV insurance practices and key challenges in underwriting and claim. It is my honor to welcome Mr. Seri Gawin Ratchatarot, Chairman of the Motor Insurance Committee of Thai General Insurance Association.
สวัสดีครับ
สวัสดีค่ะ
สวัสดีครับ While we were waiting for the slide to show up, I just would like to have a quick introduction about myself. My name is Seri Gawin Ratchatarot, as the speaker introduced. I'm currently the chairman of Motor Committee at Thai General Insurance Association or TGIA, and we were arranged this conference or webinar. Basically, we want to share some of the information about BEV insurance in Thailand market. So I will give some introductions about the market overview. Because we do have some participants from overseas as well, so I will may take a little bit times on giving some background about our BEV markets. So let's wait for the slide.
Sorry.
So as introduced earlier, we are going to give some introductions about Thailand BEV insurance markets in. So can you move to next? So the BEV in Thailand is starting from the net zero programs that government has announced since 2015. So basically, the Thai government is aimed to have net zero programs on to reach net zero level at 2035. So since 2015, the government has announced the EV 1.0, we call it EV 1.0 policy. So basically, the government has supporting the developments of hybrid car. As you may see in Thai markets, that a lot of hybrid car has been introduced for the past 10 years. And in 2018, the government has starting the focus more on the driving of the net zero programs, where they start to introduce the 2.0 programs, where they start to building up the fundamental to support the BEV growth in Thailand. But here comes the more critical part, where the government has launched the EV 3.0 in 2022, where a lot of subsidy program has been introduced to accelerate the development of BEV car in Thailand. So as you may see from the next slide, the under EV 3.0 programs, there was a big subsidy from tax and duty perspective, as you may see from the table. However, the manufacturer have to committed to the investment in Thailand with the subsidy productions of the car. In 2026, it's going to be 1 to 2. Forever, the car that has been sold before 2026, the manufacturer have to produce 2 cars. And then in 2017, the subsidy program is where we have to where the manufacturer have to subsidy the production of 3 times per car sales in the past periods. So those has been the factor that accelerate the developments of BEV car in Thailand. Can you move to next? So since 2022, late 2022 and up to 2023 and up until now, we will see that the major developments or the car sellings of EV car in Thailand is leading by BYD. In total of 2.5 years, BYD has sales almost 55,000 car already. MG has been ranking number 2 and Great Wall Motor has been ranking number 3. So the market shares of BEV of BYD is reaching almost 40% of BEV markets. However, for late 2024 and up to 2025, all the Chinese manufacturer has introduced hybrid car as well. So the number here, it doesn't represent 100% of BEV. It's also including some of the hybrid car as well. But in general, majority of the car has been sold from the Chinese manufacturer in Thailand is still BEV. So you will see a significant jumps of new car sale from year on years. Some struggling has been observed in 2024. However, looking at the first half of the year in 2025, it almost reaching the level of 2024 new car sale. So we projected that at the end of 2025, the number of new car sale in 2025 will be equivalent or maybe a little bit higher than 2023. So moving to next, we have putting down all the major brands and model that have been launched. You will see that for the past two and a half years, the number of cars that have been introduced in Thai market are significantly high. More than 20 model has been introduced in Thailand from the major brand. We are not counting the smaller brand that are not part of the top 10. So meaning in Thai markets, there are more than 30 models has been introduced for the past 2.5 years. And on the yellow bar, you will see the market share of the BEV car compared to ICE car. So you will see that from year 2023, the market share has been somewhat around 14% on average, and it has been stable in 2024, and in 2025 the market share has been introduced. In Q2 alone, the market share of BEV or Chinese OEM has been reaching 23%. So moving to next, what we would like to show here is that on the left side of the chart, the market share of BEV is now accountable for 19% in year 2025. But majority of the car that majority of BEV car in Thailand now is still sedan or passenger car. However, if you taking out because in Thai market a lot of car volume is in pickup less than 1 ton. So if we're taking out the pickup less than 1 ton, so, and we measure only BEV and the sedan car segments to ICE car, you will notice that the market share has been significantly high. Some Chinese OEM is trying to introduce the pickup car in Thailand, the BEV pickup car in Thailand, but still the sales volume is still low. However, we observe that more and more brands is now introducing pickup in Thailand. So we do expect that the market share on BEV car in Thailand, both sedan and pickup in the future will grow drastically due to the cost and the car price that usually setting up at lower price than the Chinese brand, which is the majority of the player and market share in Thailand. So moving to next. Since launch of BEV car in Thai markets, TGIA and OIC, the regulators, has working together and develop a specific policy, specific motor policy for BEV car. So it was introduced in late 2023 and effective in Jan 2024. So basically, the motor insurance policy for BEV car is only applied to personal use, a vehicle, and named driver has been enforced for all policy for BEV. And what different from normal motor insurance policy is that there is a battery depreciation table is clearly defined. So this is to avoid the dispute and negotiation on how the battery should be valued through years of insure. So the clearly defined depreciation table has been setting up. And last but not least, one of the key introduction change in Thailand BEV motor insurance policy is the introduction of driver behavior rating. As you may see from the right table, that the driving behavior rating, it will be scaled from from level 1 to level 5 with the loading factor of 100%, which means no discount. When you have no claim for for the past 12 months, you get 10% discount, which means loading factor is 90% and etc. So the intention of this driving behavior is to set up the new type of the policy where in Thai market in the past we are pricing and giving up some discount based on the vehicle, not the driver themselves. But from the introduction of BEV, this is the first motor policy for Thai market that rating based on the driving behavior. So driving behavior on this sense is more on the claim history. So moving to next, the key challenges that the industry are facing right now, there are four main categories that we are facing right now from an insurer perspective. One is battery, second is damageability, and the third is the spare part cost. And the last one would be car price volatility. In general terms, when we talk about the loss cost and the factor related to underwriting, we are usually looking at frequency and severity. So based on the industry informations and the feedback from the insurer, we observe a higher severity of BEV car than ICE car in most of the model, in most of the brand that we observe. However, from the frequency perspective, we didn't see much spike in general in compared to ICE car. So on this presentation, I would like to focus more on the four factor that related to severity that we have faced the most challenging. So going to next slide, what we show here is the battery cost and compared to the resale price. I convert this into a dollar amount, but what you will see here is that based on the major model of the car that's sold in Thailand and compared to the battery price, you see that on average the battery price is about 65% of the resale car price. So in some of the model, the percentage of battery cost is much higher. For example, like Neta, but Neta is gone bankrupt in Thai market now. But if you're looking at in the past, the battery cost itself is 90% to the resale car. In some of the brand is up on average, maybe around 60-70%. So this is the concentrated part of the risk in motor in the car for in the BEV car. So the battery cost itself is already accounted for 65% of the sum insured, which is the major concern part for the insurer to underwrite BEV risks. So moving to next, what we would like to demonstrate here is that the repairability and the damage level in compared to BEV and ICE car. So you see that when the battery is got flooded, so this is the example that if we comparing the BEV to ICE car on a car that flooded not at the level of the console, the damageability of the car is much less in ICE, where the ICE car you can clean, you can change the lubricants, and do some maintenance. The car will back to works and drivable. But in a BEV, you have to replace the battery because of the moisture that detected within the battery case itself. So this has been setting up as a total loss. In compared to ICE car, we don't have to. The second photo is on fire. For this case, we observe that the battery itself is igniting and caused the car total loss under fire. On the third photo, BYD seal, it was crashed in front of the front part of the car, which usually for the BEV car, this can be repaired. But for ICE car, this can be repaired if we hit from the front and not up to the console level. But for BEV car, this has been settled as total loss because of it crashed the battery case. And on the fourth photo, bottom left, this is the BYD Auto 3. You may observe that in 2 years ago, there was a big news about the rat that bite the battery case. And in the past, this is not some things that will set up as a total loss, because in the past, even for ICE car, the battery will the rat will somehow bite the electric wire from time to times, but that is only changed on the electric wire. But in this case, the rat is bite the battery case and cause the total loss on the car. So you will see two cases that we show here, the damage is not that high at all, but because it's caused the battery to expose to moisture and flood, so that's caused the damage to the battery and settle as a total loss. And on the last bottom right, we show here the crack in the battery case. The customer drive the car to the footpath and cause the battery to crack. So, and this also setting up as a total loss. So in compared to ICE car, this has been only the minor scratch, and we can repair the car for the crack at the lower price. But for the BEV case, this has been settled as a total loss case due to the battery cost, as mentioned in the previous slide. So moving on to the next, as mentioned earlier, the spare part of the BEV car is significantly high in compared to ICE car. So we have compared 13 major part of the body part that usually the insurer will have to repair and repair the damage. This is including bumper, rear bumper, fender, and doors. So on average, you will see that the spare part cost is double the BEV. The spare part is double to ICE car when it's BEV. So you will see we did a comparison on BYD Auto 3 and with the ICE car on the equivalent model. So you will note that it's almost double the price. And if we compare MG4 to, let's say, Honda HRV, it's also on average double the price. So this has been a problem with the insurers on setting up the premiums because of the spare part is quite high. So from the customer perspective, they always complain that BEV insurance is higher than ICE car, where they do not know that they do not aware that the spare part is significantly high. So I think this is something that we have to educate to the market that what insurer is facing right now is a high severity that we have observed in all the angle, from battery part, from spare part, and from the labor part that we usually observe. Moving to next slide. Okay, this is the tracking of the car price from launch in 2022 to 2023 on all the models that have been launched. You will notice that the car price has been changed at least 2 or 3 times for the past period. So let's take an example of BYD Auto 3. In total, it was the first launch is $32,000 and the recent price that sells is $23,000. So meaning the car price has been reduced more than 30% already. So, and looking at MG also, it was 25 at first and 24 and 21 at in late 2021, which is almost like 20% reduction in the car price. So this has been set challenging for insurer to set a proper sub-insure because of the car price keep fluctuating and on a downward trends. So especially on the renewal sub-insure renewal policy, the sub-insure has been somehow in some of the policy, the sub-insure are setting up even higher than the new car price, which is the one of the most challenging part for the insurer to adjust the sub-insure to be at the appropriate level. So this one is also a critical part for the insurer, that we are facing this challenge in setting up the sub-insure as it's going down and down every years. We have checking the situation of what we observe in Thai market and in compared to China market. Information that we got from our network in China is that they also facing the same situation in China, as the car price is getting reduced through times for the same model, and this has been impacting the second-hand car market in Thailand and also in China as well. So we still observe what will be the situation and how they react into Thai market, into second-hand market, which we can use this as a baseline when we adjust that for Thai market as well. But for the time being, we still see the fluctuation in both new car sale and second-hand car in Thai market, and we still cannot predict the clear number that how much the resale value of the second-hand car will be dropped further. So this will be a challenging for Thai market for at least the next 2 years until we see a stable in in retail car sale price of both new car sale and second hand. So moving to next, the next step for Thai General Insurance Association's actions. So for the midterm, what we're trying to push now is to develop an accurate loss cost for BEV. Although we have a market information at this point, but we are working with TIRD, the Thailand Insurance Research and Development, which is a analytics companies that helping TGIAs to run some insurance statistic. So the accurate loss cost is now under the developments and under review. So we hope that in a near future we will be able to launch the loss cost for the BEV car so that the insurers can use it as a reference when they're setting up their premium. Next one would be to promote the awareness of the driving behavior rating, because with the introduction of BEV motor insurance and driving behavior rating has been introduced, but the adoption is still low based on what we observe in the beginning and up to mid of this year. So we are considering about how we are going to promote the driving behavior rating to the end customer so that they are aware of this and use it as a tool to get the lower reinsurance premium, renew premiums. So next is the midterms. What TGIA is planning now is to collaborate with the manufacturer on how to explore the way to reduce the repair cost. This is including the spare part cost that considering significantly high to ICE cars. So we would like to explore and discuss with the manufacturer on how we can further reduce the repair cost so that we can make the BEV insurance premium more reasonable. For in a longer terms, we are discuss about how we can support the developments of BEV ecosystem. This is including the promote or how to encourage the independent repair networks as a option for customer to go and repair their car. Right now, all the BEV car, we have to go through the dealer garage to repair their car. But that as we don't have an option for customer to repair their car at the general garage. So we are going to encourage and support how we can accelerate the development of the general garage. And in order to make the customer more confidence on how to repair their car at the general garage, we are also considering collaborate with the government agency to setting up a repair standard and certification programs. So this will bring the confidence of the customer, bringing their car to sales to repair in the general garage, as mentioned in the previous initiatives. So this will setting up a new opportunity for a new products to repair the car in the general garage as well. So this is going to be a target for the next 2 to 3 years for the TGIA to push this forward. So this ends my presentation on giving the general introduction about Thai market from an insurer perspective. So thank you very much.
Oh, sorry. Thank you very much คุณเสรีนะคะ for sharing your valuable insights on the insurance perspective and challenges shaping the EV insurance market. So shall we move to the next? We will hear from the broker perspective on how the rapid growth of EV is influencing the broker business. Please join me in welcoming Mr. Jitwood Sasibut, Chief Executive Officer of Howden Maxi Insurance Broker Thailand.
Hi, good morning, everyone. Can you hear me, right? Yeah. Okay, yes. Thanks for having me in today. I'm Jitty Wood, CEO of the Howden Maxi Insurance Brokers. I'm pleased to share my broker in the prospective review that we are closest to the clients, EV car users, and closer to the car manufacturer and distributor as well, and as well as like the insurance industry, right? And Kun Ping, can you do like a full slide, please?
Okay, sure.
Yeah. As a broker, I think that we nowadays every day we listen to the thousands of the EV car owner, car distributor, dealers, fleet operators, and including the corporate clients, right? This slide you can see that there are the big complaint on the media about like, oh, insurance is quite expensive, the cost of repair is quite high, and insurance industry doesn't support for like sustainable or like government policy for the committed 30 and 30 or whatsoever. That's make us to be the villain, right? But anyway, and embrace of the concern of both sides of the clients and also with the insurance industry as well. But anyway, today we would like to share the real concern of the market based on the actual data and actual client voice. Then Anthony and the panel discussion will be discussed in further. Okay, next slide, please. Okay. It's coincidentally Kun Seli had presented, but I don't want to mention about the brand. When you can see in the left-hand side, you can see the number of new car registration during 2003 and 2024. So the total, everybody realizes is dropped a lot about new car registration among 23 and 24, about 24% down. But you see that the decreasing of the BEV car. I'm not talk about like I mean the HEV or fuel cell or hybrid, which is a BEV is drop about 8%, right? And the second column is about the EV itself for the comparing about 23 and 24. Uh, EV itself is drop from the 76,000 to be the slighter than others, right? You can see the adoption of the populars of the EV car, especially on the Chinese one. You can see the Europeans and or Japanese, they not really quite believe or not really develop on the EV car like a Chinese BEV car. The majority of the brand, as Kun Seli mentioned, is a BYD number one, MG or Eon or whatsoever. There's in top 5 or top 10 is on from the Chinese brand. On the right hand side, you can see about the new car registration of 9 months among 2024 and 25. It's been January until September. So the totals of the cars registration is still drop in the Thailand market. It's about 4%. Okay. But when you see the red one, the red slot is about the EV car, BEV car is growing 59%. Yeah. It's a lot. Okay. It means like they're taking the share from the ICE car, from the traditional one. And everybody realizes that the motor insurance is almost 60% of the country premium. So, and the motor now portion of the BEV car is starting more and more. I think that the industry cannot avoid the BEV car anymore, right? But we need to fine tune about how to support them, okay? And sustain about the client and also the insurer perspective. And the last column in right hand side, the EV car registration 9 months, you can see it's growing, as I mentioned, about 59%. So from 54,000 to 87,000. And we'll see because of it's a 9 month. And the end of this year, we have 4 months left from this data. And we'll see that they're gonna have more competitions, more pricing competition, and more, the promotions, especially on coming Motor Expo on the end of this month, end of this month. So yeah, we'll see that how it's gonna be more developed in the futures and number of vote and volume in the futures. Okay, next slide, please. And this slide, I try to summarize about like 7 biggest customer concern about the EV car. It's aligned with Kun Seri present from the TGIA in the moment that, okay, the concern in the first point, sure, that is battery. How long will be the battery for last? And something happen if the insurance cover it or not. Okay. And as Kun Seri mentioned, the OIC and TGA adopt about the depreciations. The cost of battery is going down 10%. But anyway, most insurers who play on the BEV car, they give some like option for the client to reinstate of the sum as well. Yeah. And the car lot range over. Yeah. Because it's quite new for 3 or 4 years for the BEV car in the market, we don't know and the range of the EV that the future and how much of the replacement cost. It's quite terrifying that 5% of the battery is comparing the retail price, and especially the retail price is going down time by time. So its tendency to be like total loss easier. Yeah. And anyway, for battery itself, some of the insurer they provide for the battery extended warranty or high cell, including the drivetrain motor and including high voltage battery for the extended warranty. And I heard that now some of the BEV car manufacturing is starting to give like a lifetime warranty for battery by themselves. It's quite a big challenge and big competition in the market. Second one is about the premium. Sure that the insurance premium, everybody perceives it's higher by the ICE car, about 30, 40 or whatsoever. Yeah, anyways, high premium because come from the higher cost of the repair, claim turnaround often a longer time, right? Because they worry about the parts supply in the market and about like availabilities of the parts that make the repair time is a big delay, most of the brand, right? And also limited of the garage as well. The third one is about charging infrastructures and availabilities. Is not enough charger that everybody know. Long queue at the gas station. Charging time is take long time than fuel. Fuel fillings, right? Condominium they don't have ability of like a charger in the condominium. That's all the challenge. Number 4 about repair, maintenance, and after sale service. The limited numbers of them, and car have to go back to the dealers, so no alternative garage. It means like a high cost of repair in the final. But anyway, the TGA tried to adopt about the alternative garage as an insurer garage, but not easy because of warranty of the car itself. If you do like outside the dealer's repair works, it's gonna be breach of the manufacturing warranty, right? And how you gonna supply the parts? How you gonna upload the software because of the EV cars run with the software? Yeah. The another one is about the flood and fire safety concern. Yeah, they have the adverse media about like a flood and fire on the that Kun Seri show is but try to that all the adverse media, but when have like maybe ask the EVAT that all the BEV cars with high standard from the ECE R100 R100, okay, IP67 is gonna be big standard for like a fire resistant, clash resistant, and also the water resistant as well. So that mean like the safety concern is a bit this is replaced with the standard of the country is same as standard right of the world. The car price and depreciation and yes, because of retail car price going down and going down, no one knows about the second-hand car price, and the battery value is also pushing the car price down as well. And then we will see that how gonna make it sustain in the future. Especially from the number of sales, you can see the car sales drop because of one of the thing is about the residual value of the car. Financial institute they are quite concerned about the salvage cost or residual value of the car itself. No one knows that when the default payment of the clients and how to resell the car as a second hand. That's quite challenge. That's why they are precaution to give like a financial loan to the clients in the future, as well as some insurer is hard to justify in the policy, or otherwise we have to adjust the policy. Some insurer during the period of time, I'm not sure. Okay, technical reliability. As I mentioned, the cars depends on the software. Cars is controlled by the software. All the technology built in the EV car, ADAS, self-drive, and about the sensors around. And yes, in case of this malfunction of those, insurer is not paid. Okay, they have the new EV car, they specific exclusion for like a malfunction of the software. So if it's proven, so it's not paid. Then the customer is quite concerned on that thing, and there's some argument among the insurers and manufacturers, dealers, and clients as well on this part. The last but not least is about the government policies that really like light tax in the end in the last 2 years with the government support. The people looking for the continuously of the government policy to support about the tax incentivize about the filtering to make the cost of the car part of the part is going down, and also charging infrastructure itself. Then this one is the most of the customer concern on this. So this what I try to bring about the customer that I heard about dealers, manufacturers that I touched. So I try to bring this about big concern. And thank you for opportunity to make me to share the real voice of the Thai EV customer. And as a broker, we commit to support both insurers, customer, and build stronger, more sustainable eco EV ecosystem in Thailand. And look forward to hear for the next part. Thank you.
Okay, thank you very much.
ขอบคุณครับ
Thank you very much, Mr. Jitwood นะคะ for sharing your perspective on evolving roles of brokers in this emerging market. So shall we go to the third station? We will gain the international insight and lesson learned from the China market, which is one of the world's largest and most mature EV market. This is our pleasure to welcome Mr. Anthony Baker, Ambassador of ANSIF, who will share his expertise on the experience in China from the beginning to the present with lesson learned and solutions.
Okay, thank you very much and good morning to everybody. Firstly, I just want to commend the previous presenters. It's probably a very similar scenario to China about 7 years ago. So if you can move to the next slide, please. Next. I just want to get back to the basic roots now. I heard one comment in the first presentation about the battery value. Obviously, in China, the view of the retail value with the battery to vehicle ratio is a little bit different. So it's probably a different approach into the Thai market, where the retail values are a lot higher in China. But one thing I want to point out is, and it's been mentioned, they're connected, the technology changes rapidly. There's still range and charging anxiety in China, but a lot less. There's different ownership options, which are probably not present in the Thai market yet. And basically, there's a repurposed battery market, and there's views on how to look at the condition and the health of the battery, and what does the value mean. Next. So in comparison, you just look at your mobile phone. It has some very common threads. It's connected, technology, charge anxiety, ownership options, and the value and the health. The view in China is most of the vehicles, 3 to 4 years old, change over, and it's experiencing probably what you've seen in the Thai market, where the resale value and the demand for a battery vehicle is quite low and puts a lot of pressure on the residual value. But what you've got to bear in mind, it's holding a common thread, very similar to a mobile phone. Next. So you've mentioned a little bit in the market, the market share is going to be about 20% at the end of the year. There's a lot of Chinese insurers, and it's very interesting to read that if you look at them in 12 months development, most of them will be leading and probably taking over Tesla. Actually, a few views on the Chinese market itself. So the first thing you probably ask yourself, how come the Chinese are in the Thai market? So number one, primarily everybody thought, going back about 10 years ago, it was about petroleum prices, moving to battery. It was a bit of a myth. They said they were green, environmentally friendly. That's very questionable. But the main thing is the Chinese market know the automotive market is a scale industry, and they know they've got the size to actually manufacture these vehicles cheaply. So actually, it designed a business model basically to enter into the market. And what you've got to remember about China, you're looking 15 to 20 years ago, where they never had any market entry to the combustion vehicles. So they developed a new technology with a very disruptive business model, which probably affects all of your sales and production in your market. So just to give you a highlight here, actually, there were over 300 Chinese automakers. That's scaling back considerably now. But if you look, there's some common one there, but there's actually even more that you probably haven't seen. Some highlights here is NIO. They actually battery swap. Actually, they have swapping stations. They can take it out to the vehicle. They have very different financial methods. They lease the battery. They sell the chassis of the vehicle. So all of these business models are highly disruptive, which will actually come with the vehicle. And there's probably some models that you probably haven't seen, like Xiaomi is now entering into the market. It's a mobile phone, but now they're selling cars. They look like McLarens and Porsches, and they've even got a new one out there that looks like the SUV model of the Ferrari. So it's rapidly changing in China. And you probably ask, why did they do it? Quite simple. They want to be in the Asian market. They know the Japanese and the Koreans are in this market, and they wanted to find a way to enter this market with a very disruptive business model. Next. So just to give you a view, going back probably a couple of years ago, if I'd said 15 years ago, you'd look to the left-hand side of this slide, you would have probably seen German brands, Japanese brands, and European brands, and it would have been similar to the Thai market, were probably 80% of your market, and then you would have seen 20% of others. Now, what is actually being seen in China is 80% of the market is local JVs and Chinese manufacturers, and 20% for the traditional car manufacturers. It looks very similar, the development of the Thai market, to where China was about 6-7 years ago. So I would say you're probably going to see more and more. So next. So just to give a perspective, and it's overlapping a little bit what was actually said in the last presentation, What does it mean for the stakeholders? So actually, the car manufacturers have different views, and I've used an extract here from India. So because it has the two-wheelers, three-wheelers, and the cheaper cars. So actually, if you look from their perspective, they worry about the integrity of their brand, how to maintain them, how to sell them, how to create a value proposition that their customers will buy the vehicle. Next. So then the dealers and the brokers who actually work with the dealers then face a very different point, is how to get these customers across in the sense of providing a worry-free package. How do they address the vehicle use and the maintenance? Because what happens for these dealerships, and this is probably leading to the first presentation, whilst the vehicle may be cheaper, the parts are a lot more expensive, but that's only crash parts. What you've got to think about is the maintenance of the vehicle. They're very low maintenance in the sense of warranty. So they actually do lose the revenue. So there is a position you need to balance with the repair shop as opposed to the resale dealership. And then lastly, what the dealers face is a second-hand car coming in. And it's been mentioned in both the presentations before, how do you assess the residual value of the EV? How do you look at transportation and recycling of the parts? And how do we look at the second life of the battery? Next. And then from a customer perspective, they're always worrying about the range anxiety, charge station availability, the high upfront price, what government incentives are in play, because that's important. And one thing I may allude to, just as a comparison in China, the EV cars cost more to manufacture than the combustion vehicles. Hence the reason they need to have a very disruptive model where they go in direct and actually they go showrooms. Generally in the Chinese market, to involve the dealer through the process, usually there's a markup between 20 to 25%. So hence, this direct business model came into play to make EVs affordable to combustion vehicles. So what are the pain points for the customers? Again, what do they do with a second-hand vehicle? How do they consider the battery health? They have to consider the low resale value. And basically, they're also concerned for those that actually charge at home or in the condominium is how to charge these devices. Next. So risk for the industry, this has been called out, but I want to make a very clear point on the first aspect, is the vehicle itself. And as has been mentioned, there's numerous vehicles out in the Thai market. We mentioned 30, but actually, if you look collective at the automotive industry, there's probably around about 10,000 make, model, and year manufactured series of vehicles. And as quite rightly pointed out in the first presentation, you have to look at the collective basket of parts in the sense of actually trying to understand the repair costs, because they're very different. The windscreen you knew in a combustion vehicle is very different to a windscreen in an electric car where it's got the technology fitted. So insurers really need to think about how do they look at the repair costs. It's very different. And how do they make the insurance affordable? Second point, fire hazards. It's a little bit of a myth in the Chinese market, and studies being researched, the frequency of fire hazards is about 0.07% for electric car, which is lower than a combustion vehicle frequency. But that's reversed a little bit in the sense of the two-wheelers and three-wheelers, where the quality of manufacturing is less. Lifetime of the battery, for those that do warranty, you need to consider, does this play a part? Well, effectively, car manufacturers typically around the world have a 8-year battery cover. And basically, these batteries last for about 16 years. They outlive actually the body of the vehicle, typically. So you need to actually understand where do you need to basically look at the lifetime of the battery and its use. Typically, the main issues come from the sharing economy. So you need to really understand what kilometers and utilization is being done with these vehicles, because these vehicles are very advantageous to taxis and those sorts of risks where people find there's low maintenance and actually basically they can run the vehicle for a longer period of time. Another point, total loss. It's a very big point. And if I looked at the first presentation, it's a serious issue in the sense it's the major component of the vehicle. You damage the battery, and in some of the maker models that were presented through the previous presentations, you only have to damage the battery and the manufacturer will be saying replace. So the frequency of your total losses will go up. So you'll need to consider actually the quality and the construction of the vehicles and the scenarios in where there will be total losses. Driver behavior. You have to look at the types of drivers in these vehicles now. Now, I've had some experience in the Chinese market to look at the data in the Chinese market. In fact, the driver's age, their gender is pretty much the same. But what you've got to look at from a portfolio point of view, the adopters of this technology are much younger, so they drive the averages a lot higher based on their risk profiles. So you need to consider this. The environmental behavior, how you look at damage to battery, cleanup costs, and as quite rightly pointed out, when you get to the second-hand market, people are going to be buying, you're going to get the demand for these vehicles, and where will they end up being? In China, what we're finding now is the vehicles actually being dumped in the western side of China because they can't even sell them. They have a progressive system where most of the new cars are sold on the east side of China, and then the second-hand vehicles are sold basically to the west side of China to make it affordable. And the last point, which it appears very relative to the Thai market, which becomes very important to insurers. If there's subsidies and so forth on the technology, this will drive the demand and supply aspect of the vehicle very quickly, whether they want to maintain it or not. If there's the battery going down, the residual value going down, and the subsidies are changing, actually this will have an impact to insurance companies. Next. So this was mentioned before, but I'll just give you a very general view. If you look from 2017 all the way through to 2030, the batteries are still going down, but more progressive than what it was before. What has been anticipated in the Chinese market in 2025, the battery value will go down 7%. So that is one consideration, and it will go down. So how you deal with this in the Thai market, it's something for the insurance companies to consider in their pricing. Next. Then you will look at the residual value of the vehicle, which was mentioned a lot. Electric vehicles do depreciate more than other vehicles. This is an extract from Redbook, who's in Asia Pacific. Basically, they already anticipate between 10 to 15% of vehicles would depreciate more than the other vehicles, but some more than others. So the call out here for the insurance industry is try and understand the make and model, understand its resale strategy, and how they support the value of the vehicle. Because typically what has been happening in other markets, I haven't quite seen it addressed here, is the first adopters of electric vehicles has always been the government and the fleets. Hence the vehicles reduce a lot faster. So you need to look at the view of how much the kilometers are being driven and the battery health of the vehicle to really establish what is a true residual value. But it is a big issue in the Chinese market, and I highlight it will be a challenge for the Thai market as well. Next. So here are some of the issues relating to after sales, and these aren't even parts. This is actually how they manufacture the vehicles now. If you look in this exhibit here on the left, you'll see a Tesla vehicle. If you look at back in 2018, it was roughly about 70 parts. But as you progressively look through it in 2022, it's only one. So what does that mean? If you damage the integrity of the chassis, the vehicle quite quickly becomes a write-off. So you need to understand how to account for that in the risk. On the right-hand side, you'll look at the batteries. So they've been ever increasing in the sense of its energy density, its range, and basically, and the cost has been reduced by around about 14%. what you've got to understand here is these batteries cannot be repaired. They can only be replaced. So again, creates an issue in a sense of how do you look at total losses and how do you justify the cost of insurance for the vehicle. Now, what I may add, it differs from vehicle to vehicle. If you look at MG, they have different battery structures as opposed to the BYD, who has a blade battery, which runs to the cell to chassis business setup. Next. So the evolution of the technology. So it was a bit of a myth. If you went back in the early 2000s when they were putting batteries in vehicles in China, yes, they did explode, they did heat. But if you look to the right picture, now these, you can put a raw egg on basically the battery, and the surface temperature will still maintain at 30 to 60%. But as I alluded to before, these batteries in some of the vehicles, they can be swapped. And basically, they are now adapted for autonomous driving where they have LiDARs. And I would add to this, not only are you looking at the battery situation now, but now you're looking at the business model actually change. They're becoming autonomous, they're connected, and they're used for shared mobility. Next. So, as I mentioned before, there's a progression of actually how the batteries looked in the vehicle. They were just modules, then they went cell to pack, and then they obviously went cell to chassis, cell to body. As you see in the two exhibits on the right-hand side, CATL is the leading battery manufacturer globally. They basically now do it cell to body. And if you look at the bottom exhibit, you'll also see the BYD cell to body as well. Next. So what does it mean for the market? And I would say it's drawn some comparisons in the presentations before. You have to understand the development of the battery and where it will actually go and how it will affect pricing. You also need to consider the risk is different for the charging. Actually, in the China market, they've actually identified lots of issues with the charging infrastructure and how it changes the risk. The financial risk I mentioned before is the battery development. You also need to understand what are the tax and subsidies and how it's going to impact this market and depreciation of the vehicle. But one thing I may add, which is very interesting for the Thai market, where I see the percentage of EVs sold in Thailand is 20% today. Actually, that was a very similar position in China in 2017, 2018. Actually, China progressed in 24 to 25, where 1 in 2 cars in the major cities are actually electric. And one of the big issues, which is even bigger than EV on its own, it created a price war between combustion vehicles and electric vehicles, where it sent the prices down further. I see in the last presentation where you mentioned the prices go down, but then you will also feel the pressure of combustion vehicles coming down with it as the market share grows in EV. So that's something else to consider by the impact of EVs in your market. And then the regulatory risk. You need to understand the insurance policy and the pricing and how the tariffs are impacted, the change in subsidies, as I mentioned. How does the charging infrastructure help the development of the EV space? As you've already pointed out, you have first-tier repairers, but you probably need second-tier repairers. And how do you develop that? That will come with scale. So actually, you need to consider how that actually developed through. If you look at one of the big insurers in China, Ping An, they've actually developed a second-tier repair market for actually repairing electric cars. Obviously, it's a bigger market, but that's where they've actually gone. Very interestingly, the car manufacturers in China are very bullish about becoming or having their own insurance model. This is something else to think about as an insurer or actually as a broker dealing with a car manufacturer. They will start to think that they will start to move from driving risk to product risk. And when I say that, vehicles will become autonomous. So it will move into what I call a product type liability. So you will need to think about this as it develops in your market and the market develops some infrastructure for autonomous vehicles. And lastly, how do you use the data technology in the Chinese market? Actually, they have connection to understand all the vehicles and their behavior, the charging stations, the demand and supply of them going to certain areas. They have this information and the behavior of the vehicles and the commercial vehicles. How the government plays in this industry with the car manufacturers is very, very important. And it would be very interesting to see how this plays out as your market gets bigger. Next slide. So the product itself. So next slide. I had the privilege of actually dealing with the Chinese regulator and the top insurers in China, going back around about 2018, 2019. And actually, I looked around about 7 million of their claims and basically looked at the risk profile of the risks. So the 12 call-outs here is, which could vary a little bit to Thailand itself. Because of the leasing of the battery, you might need to think about the ownership and the warranty. What do you do with user-based insurance telematics? It's more than just pricing the vehicle for behavior. It's how you use it for claims and how do you connect to the battery management system to understand how the losses occurred. The one that's been always mentioned, a key one, is depreciation. Try and understand the value of the vehicle. Hybrids will depreciate differently to electric cars. So you need to consider all of these factors in your risk profiling. Consequential damage, you need to think about the cleanup. You need to think about if it impacts like a number of vehicles in the car park or it does building damage to a condominium. You need to understand the limit of liability and how to price for this. How to look at home and battery charging liability. The next one is very important. I heard this called out about the repair costs. Trying to work with car manufacturers and understanding the repair costs and how to price for it, and actually how to work with them at the point of sale in actually charging these vehicles for insurance premium and how to reflect it in the claim is a very clear balance that's needed between the car industry and the insurance industry to make it a fair system. Just to give you an example, everybody knows when you start, and it happened in China, the repair costs are 20 to 25% higher than a normal vehicle on average in the Chinese market. Today, that's reduced to 5%. But one thing that they noticed is they would never get the combustion vehicle to equal the repair cost of an EV. Hence, they went to a direct business model. And in the Chinese market, they reduced their commission to 5% for basically insurance sales. So you need to consider some of these topics. Add-on coverage such as liability charging card. You also need to think the first adopters will be a ride-sharing, car sharing like Grabs and DDs and Uber. These are basically present because they're low for maintenance. The car classification, which I mentioned, is the number one point you need to consider in the sense of how to price these risks properly. Total loss was mentioned. You need to observe very closely how the total losses occur in your market, especially for those connected to finance. There will be a clear moral risk, particularly as they're coming off the leases or, any finance type arrangement. So you need to consider this carefully as they come off the end of the program. Liability for rented battery doesn't really appear in this market as of yet. And you really need to understand the vehicle value, the shell and the battery value. It's already been done. I can see that here, but that could progressively change. So you need to keep monitoring it. Next. So how do you actually enhance basically the risk of not just only the traditional insurance? You need to think about wall boxes, battery cover, disposal of a battery, software, cyber risk, ADAS. And then at the bottom, you should think about the commercial customers. I'm already hearing it like the light vehicles are coming into play with EV, but in the Chinese market, they're already adopting EV to even the heavy trucks now that go east to west. As an example, in the Chinese market, they actually use 20-ton trucks, basically moving east to west, where they're battery swapping every 100 kilometers along the way through that vehicle. So the technology and the business models can be very, very different, and they're autonomous. There's no driver. So the way this progresses, you need to actually follow this. Services. Next slide. You need to consider what the car manufacturer wants and what do the customers need. They want to have mobility benefits connected to the vehicle. They need help. These vehicles are new. What to do with the wall box, how to consider theft, the motor liability, the liability risk is different. Charging station cover, motor loss and damage type risk, there's some things you need to consider in the product, and roadside service. You need to think of how to actually work with the car manufacturer and the customers to deliver something where it protects the reputation of the car manufacturer and reduces the anxiety for the customer to buy the vehicle. Next. So here's a package. I'll say it, but I can't advertise it. NIO is an example with the battery swap. If you look at their business model around service, they give a lifetime warranty, no time, no mileage. Lifetime free RSA, no time, no mileage. Lifetime free in-car connectivity, 8 gig a month. Free lifetime charging 200 kilometers away from the home city up to 12 times. And then a free lifetime battery swap for the first car owner up to 6 times a month. That has reduced, but I may add, this is a very expensive business model that NIO does in China. It's very hard to duplicate into the Thai market. Next. So global pricing experience. So reflective of the work that I did with the Chinese industry through the 7 million claims, the one standout point, and it's basically coming to the conclusion of what's been mentioned before, the brand was the #1 risk factor, 3 times more than any other rating factor. GLM means a linear model. Is an actuarial term that basically understands the risk profile. And actually, this was given the view of how to move away from the sum insured limit because they depreciate so fast and they were going to a car classification. And then on the same side, they saw the same risk happening with the liability on the make, model, and year of the vehicle. And then the next couple of factors were provinces and no claim discount. Next. So the recommendations that actually came through with the China Banking Insurance Technology Lab is, one, they needed to move away from the sum insured algorithm more. 2, develop a classification system. And it needed to be separated away between electric vehicles and hybrids. The one's dual fuel and the other one is single, which is battery. Then because of its connectivity, you need to then start thinking a little bit more. These cars can be monitored, so look at the location, postcode, utilization. Then you need to look at the battery warranty and then look at the battery health. Telematics. As an example, this is China, it probably can't be done in Thailand, there's a central insurance system, CBIRC, China Banking Insurance Regulatory Commission, basically have all the data of all the car manufacturers and the insurance companies come together. They can actually do a connected utilization by kilometer if they wanted to. They haven't today, but they can. Depreciation. Whilst you have a clause in the Thai market, I already saw this, you need to probably think about splitting it away between the hybrid and the electric vehicle if it's not actually done, because they do depreciate differently. And then basically how you apply that depreciation will become important. Because of the adoption of car and ride sharing, you need to think about its utilization and the kilometers itself and how your pricing tariff actually connects to these sorts of vehicles as first adopters. Consequential damage loss, look at the limits of liabilities, charging cards, and the charging liability at home. Quite a number of these were actually adopted in 2021 and 2022 in the Chinese market. Next. So looking at UBI, I mentioned it before. We can talk about how we look at the behavior, but naturally behavior changes when people are being monitored. But you need to think about how you collect the claims information. How do you collect the battery health and location? Do you have the ability to centralize it and work with the car manufacturers and collect this information? And how easily can this be implemented for commercial risks in your market? This will give you the flexibility of understanding how to use UBI. UBI is only the basis of understanding risk probably within the 12 months. But the big benefit of UBI is if these are still maintained, you will forever change the driving behavior of people in these vehicles. Next. So rethinking about it, and this is more from a broker perspective and commercial insurance, what do you do with the data? You know, many brokers out there are actually insuring fleets. They have to look at their drivers and they go look at their company related, how they deal with the risk. There's so much information you can use with these vehicles. In the Chinese market, they actually do all of this information gathering and work with these fleet companies to actually understand how they utilize and use these vehicles and what is the behavior of their drivers. So it will become critical as more and more EVs are on the road. Next. And it was mentioned in the previous presentation, you've got to look at the cybersecurity, look at the software and how it's administrated. I would just say it's not just a view of how insurers look at this, it's how actually the insurance industry works with the regulator in the sense of how to adopt some of these things and how to use the data sensibly to build up the electric vehicle industry. Next. Commercial vehicles. This is an exhibit of actually what a traditional OEM is now doing with this connected data. They're moving to AI central gateways, cloud efficiencies, AI energy saving to the vehicle, battery monitoring, and they're progressively doing it not only for the medium to light vehicles, they're actually doing it to the heavy trucks, as I mentioned before. So what does this mean? There's missing data at the moment connected to your pricing tariff. I heard that there's going to be about 100,000 vehicles sold. How do you use this information collectively? Try and understand the segmentation of the risk factors. You may have insufficient data to price properly because you rely on historical information from an actuarial point of view. So how do you get the information on the types of vehicles? How do you get the information of the drivers? And how do you look at the utilization? What I notice in the Chinese market is particularly relating to Didi, which is the equivalent to, say, Grab in Malaysia. Effectively, it was noticed some of the vehicle risks were actually connected to this activity. So you need to look at that in your data. And then you've got to look at all the other missing risk factors that may be there to help the underwriters understand how to price this properly. Next. So moving on to product pricing examples. So as I mentioned before, in 2021, 2022, the Chinese market did two things. One, they created an autonomous vehicle tariff down in Shenzhen, which I haven't mentioned today. It's a bit progressive. So they actually now have a pricing methodology of how to look at that risk. But secondly, to the electric vehicle itself, they considered the grid and the damage it causes to power surging to the own vehicle, how the own charging station affected their vehicles, the liability that was caused through charging stations, and the compensation for assisted software, and the limited liabilities for the structures where there was a high risk of limit liability. Next. I won't go into this too much, but if you look at these exhibits, you'll see that the Chinese market thought it through very well in how to change their wording and their pricing tariff. Next. You'll see in this exhibit in the orange in the bottom, how they looked at the pure electric and the hybrid risk and the depreciation per month, how they actually looked at this. So they actually specified it out against the sum insured of the vehicle because they noticed a big difference between the value of the vehicle. Next. Then the five areas that I mentioned, which is own damage to the vehicle or third-party liability, they created new endorsements or extensions to the energy vehicle policy wording. So these need to sort of be considered because the risk is different. Next. You'll even see here, most people argue that the liability risk is, if not the same, maybe a little bit lower. Actually, it's not. Actually, the Chinese market identified through its linear model that actually the risk was over 10% more. So you need to think about the liability charge. Next. And here you'll see how specific they started to get into even these little add-on covers. Next. Next. And then lastly, then you need to think about how do you offer a comprehensive service for EV owners. One is charging infrastructure. Two is the system needs and the mobility and the convenience. This will actually help support the car manufacturer in the market and will introduce more what I call mums and dads into the Thai market to feel less anxiety in purchasing the vehicle. Next. So I've just put an exhibit out here. The future is coming. So this is like an autonomous setup. This will probably happen. It's probably a little bit longer in the future, but you will need to think of, as an underwriter or an insurance company or even a broker, how do you deal with the risk of the passengers, the operators, the manufacturers? Look at the parts and sensors and the costs. How do you deal with the software? What will happen to the infrastructure, particularly the mega cities like Bangkok? It may change. The owners, what happens to them and the pedestrians? So we need to think about this and how you could probably use data. Next. So I thought I'd go through a few examples. There was, again, in the previous presentation, there was some good exhibits, but I'll give you some views on how some of the claims determinations actually happened. So in this first case, we actually saw basically some of the cells damaged, but they thought it was the whole battery pack itself. Actually, if you're able to replace some of the parts in the pack, you can reduce the claim costs. In this scenario, over half was saved in a Beijing auto vehicle. Next. Then you look at the assembly. Actually, you might think that there's something wrong with the whole assembly pack. Actually, there are parts you can replace rather than the whole pack itself. So in this one case, they thought of replacing the whole housing. Actually, they found that there was parts that they could replace, and again, over half was saved. Next. Battery management system, it's the brain to the battery. Actually, there was a case where they thought that the battery management system had failed. Actually, it was a software fault. So actually, you need to understand what is actually happening with the computer itself. So in this case, it was actually deemed that they cleared the fault and reduced half the price and not replace the battery management system in a GEV vehicle. Then you look at here, basically the motherboard. Actually, they thought there was something wrong with the battery itself. Actually, it was the computer. Actually, so it saved in the whole replacement of the battery system. It was only the computer that needed to be changed. You need to be able to identify what is battery and what is computer technology. Next. Damaged appearance parts like water damage. In this case here, they thought the whole battery was damaged. Actually, when they actually investigated, they found the appearance parts were actually damaged, not the battery itself. They were able to salvage it. So they only had to replace the appearance parts itself. You need to understand when the battery is really damaged or not. Next. Water immersion faults, I heard it, and it was very common when I was in India as well. You need to understand basically what is actually damaged and what is not, and what is recoverable. So there are some views, and you need to understand the faults of the vehicle. You can use the battery management system to understand this as well. Next. It's a starter fault issue where it's short-circuited. This was in the BMW. They thought that the whole battery itself had gone. Actually, it was not. It was actually the starter issue. So they just replaced that. And effectively, the battery was intact, and they just had to replace the starter. Next. And then these are typical Shanghai taxis, roadway vehicles, MG cars, basically where they can actually replace the battery cells itself rather than the whole pack. So actually, you can save a lot of money on these. So the view I have on this is you really need to understand with your claims assessors, and basically the people managing your claims, where there's really issues and where things need to be repaired or replaced, or really understanding the proximate cause of the batteries. Because if you don't, you could end up with a total loss that was mentioned in previous presentations. Next. So the last part I just wanted to share with you, because this is not actually new. Actually, the market became so sophisticated in China, they were actually able to work with these auto assessing companies. And I may add it's cutting edge, and maybe the Thai market will probably need to consider this. They actually have inbuilt electric vehicle part prices, and basically they can commercially standardize and benchmark with AI algorithms using structured data, audio, and images, basically when the claim is notified to the insurance company. Next. And basically they have systems that run at 200 milliseconds going back and forth to the insurance company. So as the claims examiners are looking at EV, looking at the parts, they're looking at any leakage or fraud in the sense of actually the repair cost to the vehicle. Actually, as the claims examiners put the information in, it comes straight back at them and actually giving them a detection if there's something wrong with the repair cost by its benchmarking and its algorithm and part prices it has in its system. Next. So just to give you an example, some of the companies that are in auto AI, Ping An is the #2 insurer in China, and there's a collective number of companies there, even including Allianz, that are actually looking at the AI auto claims. And basically, it's trained there with 25 million claims going through there that actually understands this. So my call out here to those in this webinar today is you need to really think about how do you benchmark and how do you assess the claims, because quite rightly, it's very easy not to understand that, and for the claims examiner not to understand what is the real benchmark cost that they can develop. I admit through AI, it takes time to train, but actually, like any other market, and even China, this was done the same way. So this is using tech with the auto and insurance industry to support how do you manage your repair costs. Next. So insurers will need dashboards. They need to see how they control their repair networks. They need to know what is a true, real, what I call a total loss or not, if there's a real battery issue that's not making it unrepairable. Dashboards will actually be implemented to work with insurers. These exist in the Chinese market. Next. And what does it mean? And I heard about this in the first presentation, which really reconciles with the view with what China did. They try to create insurance company, policyholder, and regulatory body setup, which created a view of how to support each other, how to standardize repairs, how to reduce the claim costs and hence reduce insurance premiums, improve the vehicle classification and understand the repair costs for the car manufacturers, and how to give timely reports to support the insurance companies to make proper assessments of repairs to claims. Next. So in summary, the observations and recommendations. Think about more widely, if you look to the left-hand side, how do you look at UBI? How do you look at it in the sense of the maintenance? How do you use claims technology, as I pointed out, AI? How do you create transparency? 3, look at the sharing economy. How does that impact EV? Because they will be the first adopters. And how do you connect mobility? You know, there's some companies like Polestar, which is Volvo. Effectively, they're doing subscription modeling where they basically lease the car for a year and they swap in and out of the vehicles. So what do I recommend for the market? Really think about UBI. Secondly, think about how the insurance market integrates with the car manufacturer or the auto industry. 3, look at how you do the product innovation. And as quite rightly mentioned before, look at the accurate pricing based on the risk classification. And 4, just don't think because it's electric. Think a bit further ahead. Think about it's autonomous and it's connected. and it has commercial use. Next. And lastly, for those intermediaries and brokers out there, the business model becomes highly disruptive because they move to showrooms, is on the web platform, and is like in the shopping centers. You need to think about how to deal with this in the Thai market, how they move to subscription models, as I mentioned, how to deal with OEMs taking greater control on the ecosystem. As I mentioned, they think in this, it could be a product liability risk with autonomous. How you move from ownership to usership. So the younger generation, unlike myself, the older generation, I always like to own the car, but the younger generation are thinking how to just rent the vehicle, and they do it on online platforms. And then think about how do you connect IT platforms. If there's a way for the market to do this, it will create an advantage of understanding the risk. Next. So I know it was a long coverage of looking all the way through, but I wanted to give you how would I say, a mature view on the Chinese and India market, how we've looked at product, how we looked at pricing, how it impacts the underwriting, distribution, and the claims. So I'll leave it there, and thank you.
Okay, thank you very much. Thank you very much, Mr. Baker, for such an informative and very eye-opening presentation on the global and China EV experience. We are now moved to our final session, the panel discussion and Q&A. Please note that if you have any question, please type in the chat box only. It is our great honor to have Mr. Lars Schmidt, Chief Product and Technical Officer of Allianz Ayutthaya General Insurance Public Company Limited as our moderator for this session. Joining the panel are Mr. Seri Gawindachatarod, Chairman of the Motor Insurance Committee of TGIA, Mr. Jitwood Sasibut, CEO of Howden Maxi Insurance Broker Thailand, Mr. Anthony Baker, Ambassador of ANSIF, and last but not least, this is our honor to have Mr. Sayamnat Panasorn, Vice President for Industry and Business Development of Electric Vehicle Association of Thailand, or EVAT, and CEO of Sun Up Recycling as well. So, Mr. Schmidt, the floor is yours.
Thank you very much. Good morning, everyone. Thank you for staying for the panel discussion and Q&A on electric vehicle insurance here in Thailand. Also, thanks to the colleagues, and we have just seen 3 excellent presentations, very insightful. We want to carry on from this a little bit. EVs are here to stay. They are growing. They are transforming the automotive industry. They're transforming insurance. They're changing the way how we see risk, how we see cost and customer behavior. So now for the panel discussion, I see somebody is already posting some questions. I would like to spare with us a little bit. We're splitting the discussion into 3 topics. So number 1, we'll talk a bit again about pricing and price war of EVs. Then we want to talk a bit about spare part costs, repair networks, number 3, battery risk, and pricing as the last topics. So really glad people posting questions. Please do so. I will keep an eye out for this. But let's ideally, in the interest of time, stick to the various topics. So number 1 is resale price and price war. And what I would like to first start off from my side is with Kunsiri. Thank you very much for your earlier presentation. You already mentioned earlier that the prices for EVs are continuously changing. We have an ongoing price war, so to speak, in Thailand. So what, from yours, in a nutshell, you kind of alluded to it earlier, what are the biggest implications, the biggest challenges insurers face because the prices keep changing continuously? Kunsiri.
Hi, thank you for the questions. As I mentioned in my presentation, you will see a series of price dropping on the resale car for the past couple of years. And recently, the data that I was shown is only based on the first half of this year. But in Q3, we also see another price dropping in some of the model for BEV car in the market. So this is quite giving a insurer a challenge in properly setting up their sum insured pricing, because the new car price is now almost equivalent to the first year renewal policy. So I think the insurer have to make their system adjustment on how to adjust the sum insured properly, so that it can avoid the moral hazard of crashing a car or making the battery damage and able to get the new car. So I think this is one of the biggest concern that the insurer is having. And also through the government's EV 3.0 or up to EV 3.5, where the manufacturer have to produce their car to meet the quota that they have sold the car for the past couple of years, is making the manufacturer have no choice apart from reduce the price in order to sell out the car. So I think this is become an obvious scenario that we will see in the end of this year. However, what will be happens in next year is still very doubtful. That the manufacturer will further reduce their price or not, because they are also, some of the insurers are shifting their production to hybrid also. At the same time, they also introduce a lot of new model into the market. So we have to observe next year, especially the first half of next year, whether the manufacturer will further reduce their price or not. But we have to keep an eye on. Listen to what Anthony explained about China market. So I believe that China market is also observed the same. Comparing to China and Thailand, China has hundreds of EV models, EV car manufacturer, where Chinese only enter into Thailand is about 12 brand at this point in time. So there will be a opportunities or will be a chance where new manufacturer will get into Thailand to expand their overseas market. So this is something that we have to keep an eye on the future development of this. So for the time being, we have to adjust our operation and how we price using the sum insure as one of the factor to price it more adequately. So I think that will be my comments.
Yes, thank you, Conseri. Thank you very much. What is maybe a question then on second-hand pricing? We spoke about OEM and new ones. Considering that from an industry perspective, so what do you think will happen to the second-hand EV market then, especially in 2026? What will prices do, and how does it compare to ICE? What are you expecting?
Thank you, Lars, and good morning, everyone. I have to be humble because I'm quite a new guy here. Your presentation is very eye-opening for me, and I see one of the participants, Dr. Anki, who happened to be my professor in Chulalongkorn University. I was his student at that time. Thank you, P. as well. Okay, for the second-hand, for the used car price, it's gonna be devastated. The market is gonna be devastated. The used car price is gonna decrease rapidly. It's due mainly to the new car price pressure the used car price down, and for the reason I think P. Seri already mentioned it. This year, 2025, is the last year of the EV3 policy. Okay, it's the last year of the EV3 policy because all the manufacturers who import CBU with some subsidy from the government has to produce the vehicle in the country. And this year is a 1 to 1.5 unit. 1 unit you imported in the past. 1.5 unit you have to produce in Thailand. So it's a big pressure to produce a lot of the EV in this year, and it should be registered. It should be produced, sold, and registered within this year. So the number of the new car market entering the price war will be a lot, and that increase the pressure of the used car market next year to depreciate very quickly. That's my answer for now.
Thank you very much, Kun Siamnat. I mean, it's going to be real challenges for all of us insurers. With the drop in pricing and the continuous change, I mean, Kun Chittiwood, from a broker perspective, I mean, we have Neta recently, mother company going bankrupt and so on. For customers, the challenge buying a car and then the price changes. Do you think we're facing a significant risk of fraud also from the customer perspective? When they see the insured value drop literally 2 weeks after the purchase, and if yours, do we see a frequency increase of total losses because of this? Did you would?
Yes, yeah, thanks, Tumda. I think we have the common concerns in anybody, right? In terms of the clients, they think that they're quite peace of mind when they have like a high sum insure over than the new retail car price, right? Because the time insurance is not aligned with the new car price. So mention back to basic on the insurance indemnities. It's probably we can do like replace or repair or cash, right? In terms of like indemnity. In case because of we just as we mentioned that we are concerned about the pricing in case of lead when the car gets slightly accident, okay, 60. So in like of the accident, the fixing value of the cars at that time probably more than 70% of the retail price at that time. It means like lead to easy for the total loss, right? Then when the total loss, insurance company have to pay more than the retail price, new car price at that time. Yeah, because of the price shrinking all the time. And then I would recommend in case as in terms.
So consider what you kind of breaking up in between. Maybe you want to check
to balance among the customer and insurer. And
so consider what your connections were bad. You're kind of cutting on and off. Want to maybe see if you can check your Wi-Fi network. Consider what. Yeah, we're losing you in between. Unfortunately, would you mind trying to reconnect?
Can you repeat it again?
We are losing the connection. You go on and off. Your connections were bad.
I think I'm back. Yeah. Are you hearing me clearly? Yeah.
Now it's okay again. Let's try.
Are you? Okay. Now it's okay, right?
Mixed. Let's try. If not, maybe switch your video off. It might be better.
Yeah.
Sorry, continue. But yeah, I think we might no worries. I might go up with other questions. Maybe we can try. You can try to join with a different network in the meantime, if you don't mind. Yeah, Conseri and colleagues, I'm clear to hear. It's continue.
Okay, sure.
But okay, so sorry for this continue. Yeah, difficulty. But let's the form.
And now, yeah. Maybe you can skip on my internet first. Okay.
Yes. Okay. Unfortunately, consider. Yeah, let me move on. I think I'm seeing a lot of people posting questions, so I think I got kind of change my mind here instead of going topic by topic. Otherwise, I forget people's questions. I think it's more important. So if your colleagues, if you don't mind, let me jump about a little bit. One brief question, which I think is probably colleagues, please jump in. Either Anthony, you mentioned earlier, somebody asked asked, I feel myself that fire on HEV is higher than BEV. So hybrid EVs, HEV is way higher than BEV. Anthony, I mean, from your data, you've seen China, Australia. Is that any evidence in this?
In Australia, no evidence. In China, yes, the hybrid vehicles have more chance of catching fire than the battery vehicles. It's very well advertised when the batteries actually explode or, they have thermal runaway. But the view is it's a lot less for battery-only claims. That's evident in the Chinese data.
Okay. Interesting. Okay, that's interesting. Thank you very much, Anthony. Another question from the viewers here is high cost associated with EV claims, largely driven by the shortage of specialized EV repair centers. It's something we're going to discuss a bit later as well. Most people have to go to OEMs. There's not so many actual repair centers that are independent. What incentives, training programs, or regulatory changes are needed to expand the ecosystem of certified independent third-party repair shops in Thailand to drive down cost of claims costs? I mean, this is a question for Thailand. Ideally, Siamnath, can you jump in for this one as a market expert?
Okay. Thanks, Lars. I guess this question is going to be on me. Right. Our association, Electric Vehicle Association of Thailand, is working closely with the Thai government to develop the skills of the independent repair shop. We would like to transform them. In the past, they are very keen on fixing, repairing the internal combustion engine, the traditional cars. But now on, we organize a joint training program together with the Thai government. Of course, they sponsor some funding, and we also bring the expert from the China, for example, the Chengdu University or vocational school, to come to Thailand and do the proper training for them, not only for the third party roadside shops, but also for the vocational school teachers. We develop a joint program, of course, together with the OEM too. We try to help them to be able to repair the EV. This is for one. And another thing is that we have been talking a lot with Thai BOI. We try to secure some fund and develop the joint training program. Of course, because of this, we are going to need the involvement. We're going to need the hands of the OEM to do the technology transfer as well.
Well, thank you very much. I mean, would you think, Kunchiti would, as a broker, do you think the customers would be happy to accept independent repair shops? And how would you suggest we incentivize customers to accept this?
Right. I think that in case of the repair shop, in terms of they can fix the pain point that the client is concerned about the loss, right? In terms of repairing, as I mentioned during my presentation lately, is about the warranty of the car itself. Okay, because of now, the others starting to have like, especially you just see the campaign during the Motor Expo, coming Motor Expo, that some brands starting to give like a lifetime warranty on the car itself, including battery. In case of you adopt about like alternative garage, we need to talk with the manufacturing or OEM to make sure that it's not breached to the car warranty. Otherwise, the client is to be worried about it. And second thing is about the part supply. Yeah, I'm not sure that is because of car sales is they quite they have a big competition in each other. The margins of the car is quite thin. Okay, the margin for the dealers and OEMs come from parts. Sincerely, they have to talk is right. Once they are in case of they lost the money in terms of insurance company, they have own garage to fix it. They're gonna lose a big money as well. So they not supply the parts to the garage as well. That's a key challenge in the future. Yeah, and also about the software. When you fix the car, you need to unplug for safety thing, and then you plug in again after you completely fix it. Then yeah, how you gonna update the software? They not release the software because the software is on air, but I think that they are very strict to the car itself, and yeah, how to reactivate again. That I think that the big concern for the clients for this issue. Yeah.
Yeah, thank you very much. I mean, it seems we're looking at the questions here, the topic of dealer garage versus company garage. And Citivat, Kun Iterbon, thank you very much for question. The question of warranty and so on comes up several times. So, yeah, from insurer, I mean, yeah, it's challenging to go to a company garage. For EVs, comment here is that dealer garages tend to just replace, don't repair. Anthony mentioned the same topic earlier, right? Do you have any feedback from Australia or China how to get away from OEMs, or at least get OEM garages to repair, don't replace so much?
Yeah, so it comes with Lars, it comes with accreditation, right? So they have to follow a standard of training and certification to actually get there. But I also want to highlight one additional risk that's going to come. That's faulty workmanship. So you need to basically think about the commercial, professional, legal liability risk attached with this. So you've got to make sure that they get to that level of accreditation before getting to the second tier repairer.
Okay, thank you very much. Obviously important to make sure the repair shops know what they're doing, right? I mean, considering from an insurer's perspective here locally in Thailand, same challenges, right? Have you looked into company garage policies or establishing relationship with non-OEM repair garages to reduce the cost of EV repairs? Considering?
Yeah, I think we are considering and looking into this on how we can promote on how TII will be able to support the developments of general garage for EV. But as everyone mentions, there is a doubt about the adoptions, whether the customer would choose general garage or not. The major factor is, like Kunjit would mention, the manufacturing warranty and the concern on whether it was repair or not. But taking from another viewpoint, take a look into what happens in NETA, for example. When you have no choice, the customer will go to the general garage for repair. There's a lot of there are more and more general garage that are offering the repair for NETA because customer have no choice. So I think we have to build the ecosystem to support. We cannot just wait and hope for the best that the dealer or the manufacturer will reduce their price. So we have to create an option for the customer to choose. I think that's the key point that we have to make it happen. But whether the adoption period would take some time or it's gonna change in 1 or 2 years, or it's gonna change 5 years, we don't know. But at least we have to put that onto the roadmap because through more increasing of BEV car in Thai market, I think there will be more and more needs, especially for people who buy the second-hand car. I think they are quite cost conscious. So if we talk about normal repair without touching electric components of the car, like body repair or exterior repair, I think general garage should be able to handle that with support from like what EVAT is doing, try to promote and build the network.
Okay, thank you very much. I mean, let's stick a little bit into the repair ecosystem topic and also spare parts while we're there, right? I mean, it's very relevant for new and used cars. One of the prime challenges, I think, for EVs is to get the spare parts into the country, especially considering how many new models come out continuously. Considering that from an industry perspective, how significant do you think is the challenge here in Thailand to get spare parts for repair into the country?
And of course, the spare parts availability is a key. Is a key of the third party repairing, and of course to the insurance company. And one of the thing that we are doing is that of course because of the EV3 and EV3.5 policy, enforce the car maker to set up the manufacturing facility in here in Thailand and produce the EV in Thailand. And the next step is that right now the minimum local content is 40%. It's only 40%, which means some of the parts are procured locally. Some of the common parts with the ICE cars are here, are available widely in Thailand. But those high technology, for example, the battery, the traction motors are imported from China. So I think it's our job to promote the higher local content, and we are also talking with the Thai government, especially the excise department, to in the future to reform the excise tax structure. The more local content, the lower excise tax the car is gonna be. So this is in the hope that we localize, we bring the investment of the spare parts and all the OEM parts to be available in Thailand. It is a key to the industry development in the future.
Thank you very much.
I have question to Anthony that I'm not sure that in China they have the aftermarket parts or not for the Chinese BEV car. I'm not sure. It's like a European car. They have the aftermarket parts, right? Yeah.
Yes, they do. They have aftermarket parts, and this is already introduced.
Okay. Yeah, good.
Thank you very much, Considerate, for the question. Also, thank you, answer. I mean, obviously, this would massively help us insurers here in Thailand if we had this to actually reduce our costs. I mean, it's not just cost, it's also timing, right? Because EV repairs, to my knowledge, tend to take longer because of the spare parts availability. So maybe also then, Considerate, as a broker, how do you explain to the customer the impact of delayed repairs and so on? What's the customer's perspective of this?
Yeah, I think that we also get a big complaint from the clients when they have fixing the cars, especially when the brand news of the BEV just coming to the Thai market. And most of the time, and I know that OEM and also about the dealers try to best to manage themselves to try to maintain the reputation of the brand. Some of them they are like this part from the new car, right? Just a crack on the parts and to put a part of another car to fix the client car, right? To make it faster because of they don't have much stock of the parts in available in Thailand because it's just starting the sales. So they don't want to bearing the cost of big stock of the parts. That's why they try to disassemble for some new car to put the part to fix the cars of the client. They try to resolve this issue in the beginning, right? Some well-established brand they are the speed and about like a speed and the time of the fixing is better and better. Yeah, it's gonna be I think in the future, in case of number of cars more and more, so the delay or the times taken for the fixing the car is gonna be better as well, right? Yeah.
Okay, thank you.
Some insurer and some broker they provide like some replacement car or spare car for the customer during they waiting for the fixing the car.
Yeah, thank you. I mean, Kunseri, from TII perspective, do you see a higher amount of customer complaints when it comes to EV repairs versus ICE?
I think at the beginning is yes, a lot of complaint was there, and as Kunchit would mention, is getting better and better, but still, it has to be balanced between whether the dealer repair car faster or the customer actually have the expectation that it's gonna take slower. than ICE car. So I think it's the market adjustment by itself, but of course the repair is getting faster and faster. But I still foresee that part availability is still the biggest concern. If we talking about paint repair, body repair, not gonna be much problem. But the minute when we have to deal with the parts, change in parts, that it's gonna add up at least few more days if the part availability is there. If the part availability is not there, we're talking about weeks or months just to get the part to install.
Yeah, thank you. Thank you very much. I mean, Anthony, from your side, Australia, China, you said we are several years ahead. I mean, any recommendation? Have you seen any, let's say, partnerships develop in these markets or any other incentives you've seen from insurers to make parts available quickly to the customer in the other markets?
Yeah, so I can give you some good examples. So what is phrased in the motor insurance market is total cost of ownership, because customers not only look at the sale price of the car, they look at the repair cost as well. So actually what it creates is a reputational issue. If repair costs are very high, they can't even resell the new electric vehicle in the future. So a lot of the insurance companies work collectively with the car manufacturer to standardize the price to cover their claims in a very fair way, to collect the data, and work in this partnership to build up that ecosystem of sales for that manufacturer. So I say it's not just at a sales level it's done actually on an after sales level to actually balance this relationship to sell cars.
Well, thank you, Anthony. It's very helpful. I mean, maybe I'm looking at the questions from the audience here. It's also Visuda posted earlier, Thailand being 7 years behind China. Apart from spare parts, any other precautions you can think of, Anthony, to take or additional measures that should be included to prepare Thailand for the next 7 years?
I sort of mentioned it in the presentation. As you increase market share in EV, you need to be aware of what actually happens with the combustion industry. And the other thing you probably need to pay attention to, whilst the market is developing in Thailand, the portfolio mix will be different from today as what it will be in the future. So you really need to understand the underlying risk of your portfolio changing.
Yeah, thank you very much. We all will have to do that as insurers, right? I mean, maybe one more question from the audience. This is more on regulation. I think Consiernat, maybe ask it to you first. So Kun Bangkot here writes that the Thai insurance sector should scrap the ICE insurance policy for EVs. I mean, there's an EV policy, but I guess it's very similar to ICE, and build a purpose-designed EV insurance product that prices for the new risk of the battery and labor, and not to be focused too much on the old-fashioned ICE insurance. Any comments on that from you, Consiernat, or the rest of the panel?
I could probably make a comment, Lars.
Okay.
So when I was actually doing the review for the Chinese regulator, they didn't believe the product actually changed much. Only some of the risks actually changed. So what they believe was the biggest change, which the insurers will see, is the price. So effectively, there were some modifications, but not enough for them to actually change the wording. And doing a comparison through the globe, not a lot of insurers have changed the product. They've only enhanced the product because they see the risk relatively the same, other than some features, but the price was the big changer.
Okay, interesting. So basically, same kind of policy, different price. I mean,
Yes.
Consider any comments on this from the TGIA's perspective on the product?
Yeah, I think from the product perspective, I think we're still exploring this. There's a lot of unknown data that we have. So we have to explore the information from overseas, especially from China. where they have a lot of information related to this to further develop the product. So I do not have much comment at this point on this, but
Okay.
it's something that we are keeping an eye on.
Yes, thank you very much. So any comments from Kunjit or Siemnat on insurance products and regulation?
Okay, I'm not an expert on the insurance things, but for me, I would say this. I would say the EV is not a total substitution to the ICE. Okay, Thai government I set the target on the policy so-called 30 at 30, which means 30% of the total production in 2030 will be EV, which is really unrealistic, to be honest, because you see the domestic market situation is not doing good right now. But please don't forget, another 70% is still ICE, and of course, including XEV too. So I think the insurance policy for those internal combustion engine are still here. We still have another 70%. But yes, let's focus on the 30% of the BEV. A lot of unknowns are there. Even the manufacturer, we try to harmonize, we try to, OEM try to share the information. And we don't yet reach the conclusion because there's still unknown and still a lot of different uncertainties between OEMs and OEMs. For example, the spare part price, the lead time to get the parts from China or something like that. We are still working on it too. And let me answer back to your first question. One of the things that we are trying to do is try to set up the standard of health of battery standard. We talk a lot with the expert from China, and we did talk with the Thailand Industrial Standard Institute (TC) or SMO. We are talking with them. We try to set the common standard of health. If we can measure the battery health precisely, then we can evaluate the resale value of the vehicle more precisely. And that I think you can calculate the insurance premium more accurately too. This is one of the things that we are trying to do. And going back to Anthony comment previously, yes, we are also working on the standardization, on the certification of the labor, of the roadside, of the third-party garage. And we are working with กรมพัฒนาฝีมือแรงงาน I don't know what is it called in English. Labor Standard Institute something. We are trying to set the certificate for the third-party garage. And hopefully that can reduce the repair cost for you guys. And we also think of because you are talking about the fire hazard of the battery. And I think the car itself is pretty safe for now. It has to pass it is so-called UN R100, the battery standard, which is very strict. Everyone has to pass, otherwise the car cannot register in Thailand. This is for the four-wheelers, but not yet for the motorcycle, I would say that. Okay, not yet for the electric bike. Okay, and the battery and the car itself is pretty much safe and pass the very strict UN standard. But the missing thing is the mechanic who installed the home charger for you, and how can I say, the installation standard. We are also working on it. We have to close the loop, and sometimes people are mistaken. In case of the fire you see in the newspaper, it's not because of the car, but it's because of the very old wiring network, very bad installation of the home charger. We are also working on it. Okay, I have spoken too much.
No, it's just interesting topic. I mean, number one, I wanted to ask this, and from a customer's perspective, if we repair as insurers at an independent garage, I mean, how can we give the customer the confidence that the quality of repair is the same as it would be at an OEM?
I think let me take this. I think this is some of the issue we have to resolve. Basically, how we can get confidence from customer to go and repair at the general garage. So one of the most important thing is, standard labor, professional labor, or technician who gonna repair, and certifications. And last but not least is the warranty from the garage. I think in China, if I heard correctly, the government is supporting general garage. They are endorsing to give a certification that they are a certified garage that can repair BEV car. So I think if we take down the same path that China gone through, so I think there's a possibility that if we get a commitment or collaboration from other government agency, like Kun Siamnat has mentioned, we may be able to get to the point where we have an organization who can certify the general garage for EV car repair and certify technicians, so that customer have more confidence if they have to take their car and bring and repair it at the general garage. I think
Thank
so.
you.
So certification and guarantee is a key important components.
Thank you very much. I mean, yeah, Anthony, you mentioned it earlier, right? But any key steps you can maybe bring back from China to get us there?
No, so it's just based on a few factors. So it's the speed of the repair, the quality of the repair, and the cost itself is measured on these KPIs, and it's actually set up in the repair agreements, and they make sure that they're certified at the same level that these in China they call them 4S shops, that they basically can deliver a similar standard. This is how they do it. So I would strongly recommend, if there is connection within the government, to actually connect to the Chinese side, because they're Chinese vehicles that have a strong interest, how to get these repairs at that standard. I would be recommending that.
Okay, thank you very much. Thank you very much.
May I propose that TGIA and EVAT set up the standard batch together, prefer EV garage, and that is going to increase awareness and confidence of the customer.
Yeah, I think we have to collaborate more, because we are part of the ecosystem. So I think, yeah, I think the more we collaborate, I think the more progress we can make on this.
Yeah, we're getting just a question on this for Kunata, but I think it's on the similar in the chat on the similar line is, are there any organizations today that provide a certification to ensure good quality standards of batteries? Consider that I believe no is the answer today, right?
Not yet. Not yet.
So Lars, in the end of the presentation I showed you a little bit about how to control the claims for AI. The founder of that business is connected to Ping An, and effectively he could probably even make some introductions to other companies. I would strongly suggest that the people on the panel here may utilize him. His name is Stephen Yuan. He's actually here in this presentation. He'd be able to give some insights outside of this webinar.
That would be greatly appreciated, Stephen. Yes, for sure. Thank you very much, Anthony, for making the question.
Yeah. Hello, everyone. Yes. As far as the claim is concerned, we can not only say for the insurance companies for the traditional combustion vehicles, it's especially beneficial to the insurance company when it comes to the EV section. As a example for Ping An, though, we generally could save on the yearly basis around 5 to 10% of the all the claim cost, while speeding up the whole claim process, though. So that's all based on our AI algorithm, and we give them the best possible solutions that they can treat a claim process.
Yeah, but Stephen, sorry, Lars. Stephen, you're dealing with second-hand repairers there, right, in China with Ping An, right?
Yes, yes.
Stephen, thank you. That's
Yeah.
very insightful. I mean, I would love to get in touch with the panel and users and after and further discuss this. That's very helpful. Thank you. Thanks for jumping in. I have a couple more questions here from the people in the audience. Also, another question here is on the process of disposing batteries. This is more an ESG question. Also, the additional cost on actually we are getting rid of old batteries after an accident. And does it fall under insurance policies? I mean, first of all, on the cost and so on, maybe Consumer or Anthony, have you any experience on the disposing costs of batteries?
I'm a little less insightful in the disposal, Lars, but I know it's a dumping ground in Sichuan province. So I don't have a detailed insight to answer that one.
Maybe Consumer in Thailand, do you have any information on the cost of disposal?
To be honest, right now we should have one regulation, but it's not in place yet. It is so-called Electronic Waste Disposal Act. Unfortunately, we don't have a stable government. That's why it hasn't passed the cabinet yet. We have no regulation how we should dispose the battery properly. Right now, there is no dumping ground. There is no battery collection point. No such thing like that at this moment. However, it's not going to be the big problem for the battery disposal for EV because every time you see something has a value in it, it's not going to be dumped illegally. For the EV battery, for example, I myself, as an example, I went to the auction ground. I auctioned the accident cars, Neta and MG, 2 cars. Accident, very bad accident one. I had no intention to take anything out of the car except for the battery. And now I use those 2 battery packs to complement very well with the solar system. So I use it as the energy storage. And it's very cheap. Actually, it's very cheap. Don't tell Huawei for that because I don't buy the battery pack from Huawei. I got one from MG cars and one from Neta. It worked pretty well, very, very well.
Interesting. It's interesting. Well, I suppose you mentioned also earlier wall charges and so on. So one thing concerns me a bit that people doing these kind of things, you effectively increase a bit the risk of fire and electrical faults. Considering maybe from an insurance perspective, we discussed a lot motor insurance now. Any concerns on a home insurance perspective as an insurer from increased fire risk, wall charges, etc.? Is that a concern?
Yeah, I think in terms of the war chart, it can be an extension from a motor policy already, so we can buy and add on that. So I think there is no concern with that. So you can buy EV car, install a war chart, and then the motor insurance policy can be extended to the war chart as well. Or vice versa, you can have an old home insurance. If you declare a war chart as a content, then it also works. So both ways work. So I think that there's no concern on this perspective.
From my client here, then in terms of the war chart, I think that most of the request is about the third-party liability as well. And we know that the motor insurance endorsement, they can buy like a war chart itself, right? Right? They can buy just a war chart in case of the fire or whatsoever. But in case of the fire from the war chart damage the home, if the home is the same person is not third party, right? You need to do the home insurance, okay? But if the fire is spread out from the home to another home, then the neighbor home, that's a real concern of the client as well. That okay, can we expand for like a liability to third party or not? Right? That's quite challenging because approximate cost of the damage is come from the wall charge. Then in case of if the policy doesn't expand the liability under the policy, is gonna be home insurance maybe not trigger for the liability for the neighbor home, right? That the real concern that we are facing now. Yeah.
So Lars, just to add to this, the broker market's been a little bit innovative in this space where they combine the motor and the home insurance together. So actually to cover any gaps in exposure, whether it's a motor loss or a home loss, this should be thought about as well.
Oh, good idea. Yeah.
Very interesting. Yeah, okay. Thank you very much, Anthony. One more question here from the audience is from Visuda is on reinsurance for AV. And in China, working together with other reinsurers, I suppose also with international ones, Munich, Hanover Re, and so on. I mean, Anthony, as from Allianz, have any experience working with other reinsurers on the topic?
So specifically related to the electric vehicle itself, in the sense of motor insurance, Allianz was probably one of the leading organizations in China. They dealt with the top three in China, but I'd say the likes of Munich Re and Hanover Re, they were more into the warranty side of the battery.
Okay, interesting. And then Kunseri, maybe in Thailand, have you worked with reinsurers from TII's perspective?
I think recently there are several reinsurers from China approaching to the market and try to build some collaboration. So I see some of them are start engaging with the insurer, but it's still not turned out to be quite a massive program yet at this point in time. So this is something that we still have to wait and see on how it's going to be developed.
Yeah, so the company there is China Re. They're the main reinsurer in China, and they're working behind the scenes of top insurers.
Yeah, just last 2 weeks at TRC conference, we have Ping An is visit the big team here to do like a roadshow as well for the reinsurance for the EV car. They start helping me.
Yeah, but most of them will have to go through China Re. That's the main reinsurer.
Well, but Anthony, in China, do the Chinese OEMs probably very often have a close relationship to specific insurers, right? And if they then push to other markets, will they tend to try to work with the reinsurer to the local Chinese insurers?
Yeah, so their global programs, they typically try and work with local insurers and reinsure it back out to the reinsurance organization in China. That's their business model.
Okay. Thank you very much, Anthony. Another question here from Kun Anki on repair quality again. There's no standards in Thailand. I've heard that China's government for some time set up a quality standard for repair technicians that help very much for independent garage, but even OEM garages have to make sure they comply to the standard for technicians. It's different from Thailand. So maybe Anthony, first of you, is that correct? And in China today, that there's a standard for technicians?
Absolutely. Yeah, that goes straight through from the manufacturing side all the way through to the repairers. And actually that would be seen through the likes of Stephen's business, where they need to follow a certain standard to repair the vehicle. Absolutely.
Interesting also for OEMs. I don't think that exists in Thailand. The panelists can correct me if I'm wrong here. Any other feedback on this from the panelists?
I would say Professor Anki always asks a question that I cannot answer since my time at the university and until now.
But do the OEM, do you know OEM repair shops in Thailand, do the technicians have to have a certain certification? Or is that still like a free-for-all today?
For Thailand, yes, I think the labor standard is according to the OEM standard. I would say that people from the headquarter, from the mother company come to Thailand and do the certification, do the training and certification. But most of the time it's an in-house certification.
Yeah, so
MG is MG,
BYD
Chang'an is Chang'an. Yes, that's right. There is no centralized standard. And this is one thing the association is working with the government to set up the central standard because it's a high voltage. It's a high voltage technician. It's the different skill set. And not only for the labor, for the mechanic at the repair shop, but also on the road safety, roadside assistant. and those emergency people.
I mean, so yeah, fair point. So if an EV breaks down, it needs different treatment from an ICE. Is that not correct? Okay. So, and I suppose you say a good point there. It's not just about the quality of repair; it's also about the safety of the repairman and the high voltage, right? Are you aware of any accidents also in Thailand that have happened in repair shops? Is this something you're concerned about? The actual safety of the guy fixing the car?
I don't have the concrete data, not yet, because the data collection in Thailand is not standardized. Sometimes we heard from the police, or we heard from the news that there was a big fire in the garage, but the root cause is not yet examined.
Okay, thank you. I mean, Anthony, was it a prime concern in, say, China or Australia, safety of repair?
Yeah, I can't speak so much for China, but in Australia, definitely, because of the labor laws. So it's actually very high exposure that they actually get trained and qualified to carry out such repair work.
Okay, thank you, Anthony. Thank you. That's a very important point, right? Okay. I would like to, in the interest of time, kind of go maybe towards the last topic we had on the panel was pricing. So again, I have a statistic here that front-end collisions make around 60% of EV losses, and you have initial higher accident frequency. I suppose, Anthony, is that something you also that matches your experience in various countries?
Yeah, so without mentioning it too much, you've got the repair center in Allianz, right, in Germany. They have the view exactly the same as the market industry. There are associations for repair costs that say 60 to 70% of repairs are front-end collision. If you're able to work out the basket of parts, as was pointed out in the first presentation, you're able to define what is probably the risk price of a loss to build up your pricing algorithm.
Yeah. Okay, interesting. Thank you, Anthony. I mean, from an insurer's perspective, you mentioned it already, it's very hard to price because they're very different accident mentality. Do you take into account that you have higher accident frequency, usually for first-time users of EV at the moment?
Yes, so that is experience because I'm familiar use of the vehicle. You do get this, so there is a higher frequency, and I don't know the statistics in Thailand, but I would assume it could be something similar. I need the panel to answer that.
Yeah, I mean, consider from your side, you have this experience too, and then you price for it in your policies.
Yeah, I think we have to take a look into the past couple of years where EV car is just entered into Thai markets, right? So at that point in time, none of the insurer having any data to back up how we price. So we have to keep trial and error, throw in the price where we think it will be, and then learn from that. But through the past couple of years until now, I think insurers are having a better idea on what should be the appropriate price range to be survived in this. But there are some because in Thailand we have quite a number of insurers. So for some of them who never participate in the earlier phase of EV boom in Thailand, so they may not have enough data. They may take a business decision to step in and learn and learn based on the risk that they underwrite. In order to adjust their future pricing. So I think this is what happens. But to your questions, whether we take into other consideration of other factor or not, to align with the market practice on how we price in Thailand, we did not have a sophisticated pricing algorithm or sophisticated pricing factor. So we still based on the model. So with the lately introduction of new BEV motor policy, which is introducing a driving behavior factor. So I think this is some things that we are going to adopt and apply more into the renewal program, and hopefully it will drive the market to be more cautious driving, because we hope that the switching of insurer from one to another will be more difficult. But again, there are a number of obstacles in order to make this popular. One is PDPA, which is some concerns that where insurer cannot get the driving behavior score that easy. And another thing is the communications to the end customer is still not there yet.
Yeah, I mean, it's a complete change in the market. As I was going to ask Conjitiwood on this, actually. Do you think the customer will accept the named driver policy easily and get a personal score on driving behavior? What do you think?
Yeah, I think in the beginning there's some shortage for like when the last year that we changed the EV cars, we like name drivers, right? You need to educate the market a lot, right? In terms of broker, we need to let the clients know that what is the benefit, why they need to keep the data for like 5 specific name driver in the policy. But now they get used to it, and then I think that they're starting to collaborate from the client, or otherwise they cannot issue the policy, right? But for my view in about like the loss and during we waiting for like the insurer garage or during the cost of part and the labor, I think that I'm aligned with Kun Seri that about the UBI and about the policy itself. We need to demonstrate how the technology gonna help the insurers to give the good price to the good clients, right? Good the customer in terms of telematics, in terms of your UBI, right? And we need to modify the policy with the regulator as well. In terms of total loss, in my view, when I gonna talk this in term when I was signal was lost. In the term of total loss, because of retail car price going down a lot, and I'm thinking about why we not identify the client with the new cars in case of the total loss, because the loss is justified, the total loss justify the car, the repair cost at the time of accident, not the sum insured in the policy. So it means like the cost of the car at that time because of new cars drop a lot. So it's easy to be the total loss. Why we not pay the client with the new car instead of the pay the cash or whatsoever? That's gonna be help the insurer as well, right? In terms of effect to the loss, and the UIB and telematics gonna be fully implement. But and the challenge about PDPA that you mentioned, so we are having a big challenge on the PDPA as well. But lucky in China, they don't have the PDPA, so that's quite easy for But
I mean,
we need to crack it. Right? So, collaboration with PDPA. That's my view.
Thank you very much.
For me, I would say it would be great if we can bypass those PDPA things, because I would like to ensure you that the telematics thing are there in the modern vehicle. They are ready. All the data are collected there. They are ready. If you can utilize it to calculate your risk and the insurance policy, it would be great. And one more thing I would like to add, just a naive and maybe primitive idea from my side. Would it be possible that you give a discount for the car equipped with the advanced safety feature like ADAS, or, for example, the auto emergency braking system or lane keeping? I mean, normally you give the discount for the car that equipped with the CCTV dash cam, right? What about these features, the ADAS features? Hopefully, it's gonna make the car safer.
Yeah, so I can make. Yeah, sorry, Lars. I can make a point to this. So that has been explored by European insurers. The complexity of this is you're right, it could actually reduce it, but you need a lot of data on the make, model, and year of the vehicle to get round to accurate pricing. Otherwise, you're just blanket pricing without optimizing the risk properly.
Okay.
Thank you, Anthony. Thank you. I'm
Okay.
conscious of time, kind of, unless Consiri also would like to add to the pricing on advanced safety. Any quick comments from your side, Tana? Considered?
Lars, can I just finish off with one comment regarding the pricing? So we talked about frequency, but the bigger issue is severity. It's the larger repair costs. I'll just explain what China did, and it could be for the panel on the market to learn. One of the things is there's a misalignment between the automotive industry and the insurance industry, meaning the one pays claims and the other earns revenue from repair. So it's not always equally balanced out. So there's an ombudsman in China that monitors the part to value of vehicle ratio. And because these Chinese vehicles are coming into the market without a lot of knowledge in the sense of how they see the risk, in China, they actually got the ombudsman involved to make sure that they were pricing their parts appropriately to the value of the vehicle in the market.
Well, thank you, Anthony. It's definitely something to think about for the local regulation. Yes, thank you. Thank you very much. I'm afraid I have to stop here because it's been a really good panel discussion. I mean, thank you, Consiri, Anthony, Semnat, for a really good discussion. And thanks everyone in the audience who asked questions. Apologies if I might have missed one or two here. It's done my best to keep everybody, all the questions in. I mean, EV is here to stay. I think it's going to accelerate. Insurers have to adopt very quickly to actually keep up. Good to hear from Anthony on what China and other markets have done. And I hope everybody here in the audience got some good perspectives, some good ideas, something to take back home with them. Thank you very much, everyone, and also thank you for TII to organize the whole thing. Thank you very much. I close the channel, the panel with this one. Thank you very much.
Thank you คุณลา Thank you
Thank you.
everyone.
ขอบคุณครับ
ขอบคุณ
Thank
ค่ะ
you ครับ ขอบคุณครับ
Thank you very much to our moderator, Mr. Schmidt, and all distinguished panelists for such an insightful and engaging discussion. So that concludes our EV webinar 2025 on behalf of TGAA, TIBA, ANSIF, and TII. We would like to extend our sincere appreciation to all speakers, panelists, and participations for your kind contribution and active participation. We hope that today's session has provided you with valuable insight and ideas to help drive sustainable EV insurance ecosystem in Thailand and beyond. Before we close, we would like to kindly ask everyone to take a short survey to help us improve for our future program. Your feedback is very important for us. Also, please note that your certificate of participation and as well as the presentation slide will be sent to you via email after the webinar. Thank you very much for joining us today, and we look forward to seeing you again next year. Have a very wonderful day.